If you hold any XRP, any Solana, any Ethereum, Bitcoin, Dogecoin, Toncoin, Cardano, virtually any cryptocurrency in the market, this video, I have some powerful information to share with you guys about what's taking place right now on the Bitcoin price chart. We also have to talk about a bill to abolish the Federal Reserve, along with what is the Federal Reserve, some laws that are being worked on right now that are pro-blockchain. The reason why I'm bullish, we're talking about Tether, we're talking about what's happening with the global liquidity index compared to the rest of the market, and then some macro market predictions for the rest of this year. Comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So with Bitcoin up, about 9-10%, sitting at just shy of almost 67K the past week. Solana up 15%, XRP up only 4%, Dogecoin up 8%. So XRP is still underperforming the rest of the top of the market. Now, will that last forever? Well, let's discuss it in this video, and then let's talk about what will be the catalyst to propel XRP up, because we've talked about a lot of different projects that are absolutely crushing it since the bottom of the bear market. So you guys should be doing very, very well if you're subscribed to the channel. Of course, I like to cover XRP a lot because a lot of people want to know about it, but we like to talk about other projects. And if you want to see what projects we're bullish on and get breaking news updates first, then make sure you subscribe to bullrunners.com through the link in the description. Plug in with our private Telegram group. Got nearly 12,000 people in that group. And these videos should not be construed as financial advice. I'm not a financial advisor. Crypto's risky. You can lose all of your money. These videos are purely for education, informational purposes only. So as always, do your own research, and this video is just covering the news and what's taking place. So in order to understand what's going to happen over the next, few months, next few weeks, and over the day-to-day in the crypto market, what we need to look at is we need to look at Bitcoin's price chart. So check this out right now, because there's 5 key points that I want to talk about to understand if this breakout is a fake out or the start of the next major move in the crypto market. And so point number one is back in 2020, Bitcoin experienced a bearish cross on the MACD on August 11th, shortly before topping out at around $12,500 that you can see on the right-hand side of the screen. So when we compare back to the past and we look for similarities and confluence, the reason why this matters is a bearish cross often signals a potential downturn, which we saw play out on the price chart shortly after the cross. Now, in 2024, we could see some similarities here. But number 2, Bitcoin repeatedly got rejected from the descending resistance until it finally broke out on October 8th, leading to a higher high on October 12th. And the reason why this matters is because breakouts from descending resistances are crucial for trend reversals, because when you can identify not only a breakout, but when a higher high is formed, followed by a higher low from the previous high and the previous low in the price action, this is going to help you determine potential entry points in your trading strategy. Number 3, Bitcoin experienced a 44-day downtrend on the RSI before breaking the descending resistance, coinciding with a price breakout shortly after. And the reason why this matters is the RSI, the relative strength index, provides insight into market momentum, and breaking a descending resistance on the RSI indicates a shift from bearish to bullish momentum. So if the RSI is down near 30, which we can see happening back in 2020, that signals that we are in oversold conditions, and we don't stay in oversold conditions forever. So eventually the bears step back in, because these markets and the price action is just a balance between the bulls and the bears. So when we can identify these periods, this will give us a good idea on the best entry points in the market. So number 4, on September 15th, 2020, Bitcoin had a bullish cross on the MACD below the zero line, signaling a strong upward move from the corrective low. Now, the further below that the zero line that a bullish cross takes place, where simply a bullish cross is when the MACD line in blue crosses above the signal line in orange, the further that takes place below the zero line, the stronger the reversal signal. And the reason why this matters is bullish crosses on the MACD, especially further below the zero line, precede significant upward trends. So it's a key indicator of market strength and the bulls stepping back into the markets. Now, point number 5 is in the current 2024 chart. Right now we're in the middle of May. Well, it's mirroring the 2020 pattern. We saw a bearish cross on the MACD on March 15th last month, a downtrend on the RSI and on the price chart, and also a break of the descending resistance on the RSI recently, and a bullish cross on the MACD below the zero line happening simultaneously. So the reason why all this matters is these similarities suggest that we might be on the brink of another massive move to the upside. And while Bitcoin is currently attempting to break and hold the descending resistance at around $67,000, that's the price that we need to watch. And why these points are important is because of confluence. And so confluence in technical analysis is when multiple indicators align showing the same thing at the same time. So it strengthens the overall analysis and increases the likelihood of the predicted move. And each of these points individually suggest a potential trend reversal. However, if one point suggests that we're going up, but another indicator suggests that we're going down, and there's not that much confluence, it's not that strong of a signal. So if you have more of these indicators lining up and saying the same thing, the strength of the signal, meaning that we're going up, increases, because together they provide a powerful case for another bullish breakout. So the magnitude of lining these up is the alignment of these indicators provides a strong signal that when we see this happen in the past too, so we take not only indicators, but we take chart patterns of the past, line them up to the future, it can give us an idea of how to predict what's coming next, because I don't 100% know exactly what's going to happen next. I don't know what price Bitcoin's going to go to. I don't know what price XRP is going to go to, but one thing I can look at is the facts, show you guys the facts, and then you can make your own educated decision. So I do have a warning for you though, because if Bitcoin fails to break and hold above $67,000, this resistance right here, then we could be in for a longer consolidation period going into the end of May and early June. But overall, the macro, when you zoom out, is looking incredibly bullish. So we're going to continue to monitor the Bitcoin price chart and explain this to you guys on this channel, so that way you can gauge the altcoin market. So make sure you subscribe and like this video if you like seeing content like this, because when Bitcoin is bullish, altcoins are extra bullish, and when Bitcoin is bearish, altcoins are extra bearish. Now, if you guys watched my video a couple days ago, I talked about some macro market things happening that are bullish for the industry, such as buybacks happening for bonds at the end of this month, also leading into election year, Democrats, Republicans fighting for votes. So Donald Trump coming out saying he supports crypto, and then some bills going to the desk of Joe Biden. We'll see if he's positive for it. If he's negative, it doesn't really matter either way, because other countries are bullish for crypto. So that just further puts the United States back. But some breaking news just hit with Congress wanting to abolish the Federal Reserve. So in this move, the Federal Reserve Board Abolition Act aims to dismantle the Federal Reserve System, shaking up the entire financial world. So Americans are suffering under crippling inflation, and the Federal Reserve is to blame, because during COVID, the pandemic, the Federal Reserve created trillions of dollars out of thin air, loaned it to the Treasury Department to enable unprecedented deficit spending. And by monetizing the debt, the Federal Reserve devalued the dollar and enabled free money policies that caused the high inflation that we see today. Sure, that caused a pump in the crypto market, but at the expense of higher, goods and services and stores that you're going to have to pay for. So if you're just a hard working, everyday citizen, blue collar American here, and you're not investing and you're just saving money, you will be wrecked over the next decade. I can promise you that. And monetizing debt is closely coordinated. It's an effort between the White House, the Federal Reserve, the Treasury Department, Congress, big banks, and Wall Street. So if you want to be able to beat the banks, if you want to be able to beat Wall Street, you have to be very good at playing this game, because through this process, people that are getting close to retirement are seeing their savings evaporate due to the actions of a central bank pursuing inflationary policies that benefit the wealthy and the connected, because if inflation stays higher and they have their money investments, well, their investments go up. And so, yes, inflation is technically a problem for them, because they still got to spend that money and see the inflationary pressures, but because their investments are outpacing inflation drastically, with crypto going through the roof and gold just recently passed the all-time high, even though gold and silver is more suppressed, people are saying crypto's suppressed, but it has more appreciation to the upside than any other market in history. So if we really want to reduce inflation, they're saying that the most effective policy is to end the Federal Reserve. Now, I don't know if that's going to be passed. In fact, if we look at the comments right here, we could say some people are saying there's no chance in the world this will pass, but the fact that this has been brought up will send shockwaves through the Federal Reserve and world banking system. Elon Musk posted this on Twitter less than a week ago, saying how the Federal Reserve works, just posting a monopoly photo. Number one, what if the bank runs out of money? Well, some players think the bank is bankrupt if it runs out of money, but the bank never goes bankrupt. The U.S. government never goes bankrupt. To continue playing, use slips of paper to keep track of each player's banking transactions, debt, until the bank has enough money to operate again. The banker may also issue new money on slips of ordinary paper, aka just printing money to keep the game going. Now, according to XRP DigiGold, we know the Federal Reserve was boarded up in 2021 approximately and backed into the Treasury. However, that's when taxes begun in 1913. When they abolished this bill from 1913, they will probably abolish taxes. So this is what's spoken about in Gesara and Nasara. Now, I'm not here to spread conspiracy theories. I want to talk about facts, but I found these videos very interesting. Listen to this.
Time to end the feds. And from a unanimous vote from the X community to end the feds at 87%, U.S. Representative Thomas Massie from Kentucky, the Bluegrass State, let's go, 4th Congressional District, has just introduced a bill called End the Feds, Federal Reserve Board Abolish Act. Did you know that inflation is just another form of taxation? And it's true, because if you understood how the money really operated, then you would know that we have lost over 99.7% of our purchasing power since the creation of the Federal Reserve. They're one of the many reasons why the U.S. national debt is at a staggering $34 trillion. Because they just keep on printing the money, taking care of themselves on the back end, while we, the people, are the ones that are suffering. So this is where we, the people from the United States of America, come in to help. Contact your state representative. Let them know that you are in support of Tom Massie End the Fed bill, HR 8421. Make sure you give him a follow on X so you can keep up with the bill. Like this post, share it, hashtag End the Feds. And this is why it's so important to know what you hold. Let's go.
Income taxes. You realize that until 1913 in America, we had no income taxes. And the government thrived. It was doing just fine. Income taxes are the greatest fraud ever perpetrated on the American public. The Constitution forbids it, and yet we have it as an amendment. So what do income taxes do for the government? It relieves the burden from the government of actually doing any work in terms of collecting revenues. Don't have to be creative, don't have to do anything. And it has 50 million people that do their paperwork every year. Every year. So we do the work, fill out the forms, and give them all of the documentation of our life. And they just collect the money. I'm sorry, I just think that's the coolest joke ever perpetrated on an unsuspecting people. Don't be so unsuspecting.
What is slavery? It is where one person or one group owns another person's time and also owns the fruits of their productivity. You believe that slavery ended. It did not. It merely became more subtle and more refined. In the old days of slavery, it was brute force that people did not want to adapt to. Many of the slaves were killed, brutalized in order to make them work, which they did not. What happens in our system? We are slaves, and we work voluntarily. Not just voluntarily, we compete for the privilege of being higher slaves. What is the average life? You work 50 weeks out of the year for someone else or something else. You have 2 weeks off in the summertime. You are paid just enough to get by or to feel like you're getting ahead. While you're making $100,000 a year, your company or your boss is making $1 million per year off of your labor. And you want this. You accept this. You live this. Why? Because you have bought into the existing power structure that there is no other way. And for a long time there has been no other way. But now there is. It is cryptocurrency, the blockchain, a means of freeing ourselves from this yoke that we have so willingly applied to our shoulders. Now, today, at this moment, make a decision. Take your life into your own hands. Unlock the door to your cage. Come into the light with us. Come into the light with us. Please read the Declaration of Currency Independence. It might be the most important document you've ever read. Thank you.
Now, as you guys know, there's some massive bills being proposed right now. So whether they go through or not, we will see. But the House passed 3 pro-blockchain bills: Deploying American Blockchain Act of 2023, the Consumer Safety Technology Act, the Promoting Resilient Supply Chain Act of 2023, and then the House also passed the SAB 121 repeal resolution with support from 207 Republicans and 21 Democrats. So they're moving forward with blockchain. They're moving forward with crypto, another major bullish catalyst that is going to send altcoins skyrocketing over the next 1 to 2 years. Now, here's another bullish catalyst. In breaking news, $1 billion in USDT Tether was minted on the Tether treasury. So we're going up because this is how the Fed is monetizing its debt, according to Marty Party here. Now, according to the charts, let's look at what happened in the past, the last time that Tether, absorbed a lot of the market cap dominance of the industry and also saw liquidity flow out of Tether into the rest of the altcoin market. So look at the top. This is Tether's market cap dominance. At the bottom, this is total 2, which is the crypto total market cap excluding Bitcoin, all the way back in January of 2021, when the altcoin market really started to break out from $225 billion and went upwards of almost $1.5 trillion by May of 2021. Tether's dominance hovered around this ascending support. In fact, this ascending support goes all the way back to December of 2017. So Tether has respected this support and been rejected from it, where we can see Tether bobbling around during the entire bull run right here, all the way down at 2%. It wasn't until about May of 2021 when the whole altcoin market topped out at about 1.5 trillion and saw correction back down to 570 that Tether took off again and went upwards of 5%, absorbing more. Because during periods of volatility where altcoins and Bitcoin's going down, Tether's dominance goes up because people hedge and they put more money into Tether than they do into altcoins. Now, why has Tether's dominance seen this ascending support over the past few years where the dominance just continuously, steadily climbs higher? It's because hedge funds, institutions, whales, and smart investors, instead of them hedging out of the altcoin market during periods of volatility and putting it into cash, USD, they keep it into USDT. So Tether's dominance, being rejected from this ascending support shows that Tether's just grabbing more of the market share in the whole industry. And if we look and confirm this on coinmarketcap.com, that's why USDT is number 3 at $111 billion. So this is another chart that we need to look at and analyze closely. So if we look at where we're at right now, we got rejected from this ascending support right here by March of 2024. So Tether's dominance started to rise again from 3% to where it's at now, 4.7%. Simultaneously, that's where we've seen the correction happen in the crypto market, where the $1.2 trillion in altcoins has seen a sell-off down to 900 billion. And now we're just hovering at right around $1 trillion. So if I trace up Tether's dominance chart from the past, when we really started this breakout period and put it up to where we are right now, what we would need to see on Tether's dominance for us to see an altcoin breakout moving forward towards the rest of this year, towards election, is we would need to see Tether's dominance come back down and right along this ascending support right here, similar to what we saw happen from January of 2021 until May of 2021. While Tether just bobbled around and stayed down here, more money was going into altcoins. So the reason why Tether's dominance just kind of stayed around this zone is because as people made more money in altcoins, they did hedge out some of that and keep it in Tether. So Tether relatively held a strong percentage of the entire market cap as the whole market cap grew. Whereas if Tether's dominance rises up, then we'll most likely see a deeper correction for altcoins. And so at some point, once we see the next top come in for the altcoin market, which I believe would be upwards of $3 trillion to $5 trillion before we see another massive correction, it would look something like this. And I would expect Tether's dominance to get rejected from this descending resistance right here. As you can see, it got rejected from it back in September 2023. And so I don't think that will happen until the next major corrective period. And we might not even go that high up for Tether's dominance. We might come up to this horizontal resistance at about 6.5% before getting rejected from that again. But either way, the catalyst is based on the global liquidity index. So listen to what Raoul Paul has to say right here.
This is global liquidity. This is the GMI global liquidity. This was on that tweet thread. Now, it's a very colorful chart. You probably can't read it. If you're colorblind, you're totally but what it says is the yellow periods are summer. In summer, what we find is liquidity increases. This is global liquidity, not US liquidity, global liquidity. So in summer, liquidity starts increasing. Obviously, 2020, because of the pandemic, it went bananas. But 2016, 2012, these were good periods for liquidity. And guess what? Crypto, technology, they all rose. Then you get into fall. Fall is often when the real fireworks happen. Liquidity keeps pumping and then eventually tops out into winter. That's when you get the corrections, the crypto down cycles. So we've got the best two parts of the cycle to come. Obviously, the best entry was at the bottom of winter.
So if we trace up the global liquidity index to Bitcoin to see how this has affected the market, well, let's look back here in November 2021 when the global liquidity index topped at the exact same time Bitcoin topped. And then when it declined, Bitcoin declined. When it bottomed, Bitcoin bottomed shortly after that by November of 2022 going into December. Then we saw this recovery in global liquidity. We also saw this recovery in Bitcoin. And then once it topped out again in April of 2023 for a lower high, we saw this decline, global liquidity. Bitcoin traded sideways and struggled to break out. And it wasn't until like October of 2023 going into November, global liquidity started to see an increase again with the crypto market. Now, couple that with ETF news happening, people buying the rumors for that stacked on top of it. And then the sell the news event, we saw Bitcoin go from 48,000 down to 38 real quick. That was mostly market manipulation because the SEC got hacked, right? And where Gary Gensler, like the SEC posted that the ETFs were approved, the market pumped. Then Gary Gensler posted that they weren't approved and that they were hacked. So how is the agency that's supposed to be protecting investors gets hacked? I don't know. I find that very weird, but I find that massive market manipulation for them to scoop up more right here. And what was interesting is the global liquidity declined though, while Bitcoin went up after that. So this was just a race to like pump a bunch of money into crypto right here. And then with this correction period right now that took place, it kind of like followed back in line with global liquidity. Now with the liquidity, global liquidity going up, Bitcoin's going up. So if we see global liquidity continuously trend up this summer going into fall, then we could see Bitcoin pass its all-time high and then continuously trend higher. And then eventually that flowing into the rest of the altcoin market. Now, this is the first time in history where retail can invest into crypto before the big institutions, because if you guys have been watching this channel, I've been making videos all through the bear market talking about what's coming when the market bottoms out and how you're able to front run institutions like BlackRock, Fidelity that have been piling into the markets right now versus you piling in at the end of the market and being used as exit liquidity by the wealthy institutions.
The thing that's very different, and I've been out in Silicon Valley for about 20 years, the thing that's very different about what's happening now versus the dot-com bubble is the dot-com bubble, it was the institutional investors who were in, and then retail came on top and priced things up. The exact opposite has happened here. You have retail and kind of speculative interest already in the market, and now you have institutional money starting to come in.
But you recently predicted that the crypto market will double in size to $5 trillion by the end of 2024. That is a big prediction just by the end of this year.
Yeah, I don't even feel like it's that big a prediction when you step back. And, like any market, this is driven by supply and demand. You have decreasing supply for a whole bunch of reasons, the halving of Bitcoin being an important one. You have an increasing demand, the ETF being a key part of that. And I think it's also people realizing that crypto plays a role as an asset. But so it's basically just predicting it's going to double by the end of the year. And if anything, I think I probably under-predicted that.
Putting regulation around this, putting barriers in place is going to be a positive for this market.
There is no question. I mean, one of the headwinds that has held back the market, the largest economy in the world, the United States, has been one of the most problematic for the crypto market. So Dubai, Singapore, even the UK, the EU has passed legislative progress here. The U.S. has really been behind the eight ball. This administration, I think, has taken a pretty anti-crypto stance, led by the SEC. Gary Gensler, as the chair, has really taken...
Because he doesn't understand it.
I think there's
Well, maybe he does and the people working for him don't.
It's not clear to me. I mean, clearly, I think you have politicians, and I would frankly call out Elizabeth Warren goes out and says the only people using crypto are, bad actors. It's just not true.
Because you recently announced Ripple is launching a U.S. dollar-backed stablecoin later this year. You say this bridges the gap between traditional finance and cryptocurrency. Tell us how that will play out, why it's valuable, and give us the growth story for Ripple. Where does growth come from at your company in the coming 3 years?
Ripple, about over 95% of our customers are non-U.S. financial institutions. We sell payment solutions, we sell custody solutions around blockchain and crypto. We're going to keep expanding, even though the U.S. market, as we were talking about earlier, partly from a regulatory point of view, has been slow to adopt. The non-U.S. market has been really, really strong for us. And you're
going to be the infrastructure around all of that.
That is our goal. And we think that opportunity is huge. We think that's going to be great for Ripple. We think it's going to be great for XRP, which is a digital asset we use.
And the stablecoin?
Oh, the stablecoin. So like Ripple has always been about how do we bridge this new world with a traditional kind of, people call it TradFi, traditional finance. And Ripple has always been that bridge. We started around payments and we sell into banks. A stablecoin, the demand for stablecoins has exceeded, I think, what people thought. It's a $150 billion asset class right now. Some forecast it to be over 2-3 trillion in a few years. The players in that space, particularly one called Tether, is a non-US based entity. And the US, frankly, is kind of going after that because they want this to be regulated. Just yesterday, there's a new bill introduced in the Senate to create some stablecoin legislation, which I think is a positive step of like, hey, finally, we might get some forward momentum there. But I think that market's going to grow a lot. I think a US-based player who is compliance first has a great role to play.
So if his prediction comes true, we see the whole market by $5 trillion before the end of this year, then position yourself in the markets right now could quite possibly be the smartest thing that you do to create generational wealth. So if you're ready to become the first millionaire in your family tree with crypto, and you want to get early access to our underground guidebook to become a crypto millionaire when it's released, then all you need to do right now is go to bullrunners.com and you're going to get exclusive early access to alerts on explosive altcoins with timely notifications about high potential projects before they hit the mainstream market. You're also going to get access to daily market analysis videos where you can watch daily videos like this to stay up to date on the latest trends and updates in the cryptocurrency market. And you're also going to receive pro trading strategies and tools for you to access proven trading tips and institutional grade indicators to refine your trading strategy. So don't miss out on the launch of our new underground guidebook called Altcoin Secrets that's going to help you discover the next 100x altcoin. All you need to do to get early access is go to bullrunners.com, click the button on the page, put in your best email address, and you'll be instantly subscribed for the early bird list when it's released. We know you're going to love it.